What are the advantages of index funds? Index funds have several advantages over other types of investments. Many people choose index funds because they don't know what else to do, but that's okay. Fortunately, an index fund isn't just a quick and simple solution. It can also provide a better return over time than any other investment. Consider these advantages of index funds. Number 1, index funds have low operating expenses. A very small staff of people can manage an index fund. There's no need for a team of analysts to scour the earth looking for the next great stock. The management team of a typical mutual fund requires numerous analysts, a large office, and considerable travel expenses. The fees of an index fund can be 1/10 of the fees of a traditional fund. Number 2, the fund manager is a non-issue. It can be wise to investigate the background and performance of a mutual fund manager, but the manager isn't making a lot of decisions in the stock picking process. The manager's primary responsibility is to accurately mirror the index. Number 3, you'll be fully invested. Conventional mutual funds can have as much as 10% of their available assets in the form of cash while looking for a good deal. Money that isn't invested can't provide a return. Number 4, index funds have lower tax exposure. Index funds have a much lower turnover rate and taxes are less of an issue. Every time a fund sells a stock and takes a profit, those profits are taxed, resulting in less money available for investments. Minimal turnover reduces tax exposure by taking gains less frequently. Number 5, you can generally expect to receive superior results. Within an asset class, index funds are routinely in the top 10% for returns. An investor can expect better returns with less risk and at a lower expense. Fewer professional money managers are able to beat the returns found in index funds. Number 6, index funds provide an incredible level of diversification. You can effectively own thousands of stocks with a small investment. For example, some index funds allow you to invest just $100, yet you still own parts of thousands of stocks. All of this can be accomplished without having to shoulder the expense of making 500 transactions. Number 7, index funds require little attention or maintenance for investors. The primary decision an investor needs to make is choosing an index. In most cases, the most efficient fund within that index will provide the best returns. Owning individual stocks requires regular analysis. It's important to know how each stock is performing. Regular analysis requires both time and expertise. An index fund is much simpler to own. These advantages are worth considering. If you don't currently own an index fund, how has your portfolio been performing when compared to the typical S&P 500 index fund? It's possible you've been missing out on a lucrative investment that requires minimal time, attention, and expertise.